Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. Well, it is Wednesday, the last day of November, and because of Chairman Powell's comments, it looks as if the market moved a little bit of higher. And basically, what he said was pretty much in a nutshell that the size of the hikes will start decreasing as early as the December meeting. So the stocks rallied on that. We are going to have some increases, of course, in the interest rates, but the size is going to be decreasing, which the market liked the sound of that. But it's not like they're staying steady, so they're still going up, and we have to be really cognizant of that as well. So, but the market did rally, and it was interesting today. We had 1,452 stocks that were up in volume, down in volume just 59. So a lot of activity. We're waiting on Chairman Powell on this one. Wanted to show you a stock that is setting up very nicely, and of course that's probably one you've all heard of, and that's Charles Schwab. I did a little bit of analysis on it, not kind of looking at where we're headed with this one, and I do think that this one could be a buy here, and it is in a good sector. It's in the buy zone. It's right above the buy point. The buy point on this one is 81.06. So that's looking good. Let's see if we can go over to the live chart here for Charles Schwab. Symbol, of course, is SC. HW is the symbol for Charles Schwab. Let's kind of there we go. All right, so that came up nicely on the chart. And basically, what's going on here, of course, is that um, we are basically we've moved up through that buy zone. 81.08 is the buy point on that. That's the little mark there. The relative strength is increasing. It's 88 and it's moving higher. So that's looking good. And also off a little bit after hours, but just not that much. Let's take a look at the checklist to see. Yeah, it's 100% on that checklist. That's you want to be buying the strongest things that you can in this kind of market. It's still a really tough market to trade, but try to choose the strongest ones, the best ponies that you can get. That's, I think, the way to go. This has a 100% checklist on it and is in the buy zone now. So this is definitely actionable as we speak. It's coming out of a cup with handle pattern, and of course, the pivot is 81.06. And by the way, the pivot and the buy point, essentially, that's the same thing. And we're up about 2% in the last 6 days. So it is looking fairly strong. It pulled back to the 10-day line, and then it looks like it's going to be moving higher. So that indeed is a kind of a good thing. So you might want to keep that one you might want to keep that one. Take a look at it. Charles Schwab, SCHW. That's the symbol on that one. Charles Schwab. So not a bad stock at all to be looking at. All right, let's take a look at currently what I have long. I only have two things long. I did add yesterday Marathon Oil. I did. It was up today, just slightly, about 29 cents a share. I'll do on a little bit of a lower volume there, but definitely up. And I also have a BP. I've been, as of late, I've been looking at the market and I'm trying to find refiners, potentially companies that are doing refining, creating diesel fuel, because that's sort of what's in short supply right now. And I have two of them. One, of course, is BP, and the other one is Marathon Oil. So let's take a look at MRO just really quickly. I do think that this is still in the buy zone. I didn't check it before the show, but let's take a look to see kind of if it's in the buy zone there. And definitely, yeah, we're just above the buy zone, just ever so slightly. We're not, we're not that far above the buy zone here, but it is up after hours, $30.67. So let's kind of look at the particulars on this one. Again, another 100% checklist, just like with Schwab. 100% on this one passes on all levels. And on the pattern recognition, this is a cup with handle, and it's in the last 29 days, MRO has moved up about 6%. So in a troubled market, this is still doing very, very well. So this is another one that possibly could be a consideration here. Relative strength on this one is 97, which means it's in the top 3% currently of all the stocks in the market. And it has pulled back, and I think it's going to reverse higher. That's my guess on it. But might be one that you might want to look at. And of course, there is BP. Let's take a quick look at BP. Um, see how that's performing, and then I'm gonna. Yeah, there we go. Now BP, unfortunately, is extended, so I wouldn't recommend buying at this level. You can see I bought it basically right as it broke out above the 32, 50, 88 buy point. That's where I bought it, and then I kind of held on to it for a while. Hopefully, this will be the same kind of pattern with Marathon, but right now with BP, I don't think we can do anything because it is extended. So that's something to be very careful about, especially in this market. It's just one of these markets where you don't want to buy. You don't want to buy stocks that are extended, because if they do pull back, they're going to pull back, and it's going to be it's going to be painful. So what you want to do is you want to buy it as it's coming out of a base, at the buy point or close to the buy point, and then ride it up, and then and keep pushing your stop loss up. So that's sort of that's sort of the long and the short of it. On the stock of the day today, we're looking at an interesting company that I was not familiar with at all, and this is PODD. This is the stock of the day. It makes insulin pumps, which is an interesting business, I guess. I don't know anything really about it, but it does make insulin pumps. So kind of interesting stock currently. When the slide was taken, it was at 2.9. It's coming out of a double bottom pattern. This is a powerful pattern, and it's moving up today. So something that you might want to look at. Relative strength is 91, which is very good. I mean, it's in the top 8% of all the shares out there. So this is also one you could look at. PODD. It's in the medical device space. So that might be, that right now it's a pretty defensive area of the market, but definitely one that that a lot of the funds are looking to put their money in. It's in the buy zone. No, I'm sorry, just right above the buy zone right now. There's resistance at about 300. So probably on this one, if you want to buy this one, I'd kind of wait to see if it moves above 300. That's where I'd buy it, above 300, because it does look like there's some resistance there, but it does look like there's strong interest in this stock. Let's just take a look at some of the fundamentals on the weekly here. And this is going to give us an idea of kind of what people are thinking about this stock in the investment community. And we did just come through earnings in September. Their sales were up 24%, and their profits were up 150% quarter over quarter. So that's very, very good. Here's a bit, because this is a little bit of a speculative stock. It has a PE ratio of 375. So that's kind of high, but in the growth stock investing, a high PE ratio is not necessarily a bad thing if they're moving into a new market with new opportunities. Cash flow, they are revenue positive, which is a good thing. $1.07, but it is still a little bit high of a PE ratio. So probably in this market environment, at least for myself, I probably would not be a buyer of this one, just because of the higher PE ratio that it has. So that's the long and the short of that. So let's get to some of your questions. Thank you for holding on here, and let's see. Let's take a question here first from. Let's see. Okay, Sarah. Thank you very much, Sarah, for taking a look at the show. I really appreciate it. Rambus, RMBS, and Schwab. We covered Schwab a little bit, but let's kind of continue taking a look at Schwab. Very interesting company, of course. But let's take a little bit another look at the chart for Schwab and see what's going on there with Schwab. So let's see if we can move back to there. Okay, so that's not the correct. Let's get the correct chart up here. There we go. All right. So it's going to be, let's see, SCHW, and that's Charles Schwab. There we go. And let's see if I can get the right, make sure that's right. What I'm doing is I'm switching over to the Charles Schwab chart. And I didn't quite, yeah, there we go. So I think this is going to give us the Charles Schwab chart. Good. All right, so here we go with Charles Schwab. All right, so basically the thing that's going on here with Charles Schwab is that it's 100 again. This is one we were talking about a little bit yesterday. This one is, got 100%, of course, on the checklist. So that's good. That's really, really good, especially in this market. If this market does go higher into December, and that typically is the pattern, we typically will see a rally in December. This one's right in the buy zone. So you could buy this right now. It's got a 100% checklist. I probably would start out with a half a position. The way, of course, that works is that think of your portfolio as like a pizza. And if you have 8 slices on that pizza, each one is going to be worth about 12.5% of the value, the total value of the portfolio. So here's what I would do if I wanted to go in with Charles Schwab. I'd figure out what that number was, and I would figure out, and I probably should release a spreadsheet because I use a spreadsheet to calculate this, the number of shares that would buy that amount, about 6.25% of the total value of the portfolio. That's probably the maximum that you want to buy in that first tranche. But I definitely think that you could do it with Charles Schwab. So looking pretty good with Schwab. Okay, let's look at also Rambus RMBS. This is a longtime favorite stock, and I haven't looked at it for a while. I haven't traded this one in a little over a year, so I'm not as familiar with what it's trading like today out of Rambus. But this is an all-time favorite of a lot of traders. Currently, Rambus is above. There's a 33.75 buy point on Rambus with a cup without handle formation. And it does look like it is a bit extended. So probably, even though it's moving up, and this is one of the hardest things to learn, I tell you, I lost countless dollars because I didn't do this, but don't chase the stock. I just think that if you were buying it here, you'd be chasing it. And I don't think this is, especially in this market, I don't think it's a good time to chase. It's got a checklist of 78%, which is excellent. The issue here, of course, is the fact that it's a little bit extended. As you can see on the 21-day line, we're up 6.892% above that 21-day line. So here's what I would do. If it does pull back, that would be a good place that you could buy it. If it pulled back to the 10-day line, that's this pink line here. But if it didn't, then I would probably pass on this one. Just not because it's bad. It's a bad stock. It's not. It's a great stock. Just that it doesn't meet the criteria. It's extended, and in this market, you could it's a tough way to buy extended. So not a good time to be buying extended in this market. All right, let's take a look at some of the questions from TikTok. Thank you for holding on. The US 30. Okay, this is like the Dow. This is interesting. Ricky again. Hey, Ricky. All right, so let's take a look at the US 30. I think that's how. Is that how it's US 30? Yeah, this is kind of like the Dow. Well, I guess I don't know what the symbol is for the US 30. But let's look at the diamond, which is essentially the same thing. This is the ETF that covers the Dow 30, and it's called the Diamond, the DIA, and it's definitely a good one to take a look at in terms of that. The look here, it moved up, as you see, strongly today on Powell's news. It is well, it's pulling back a little bit after hours. It was up a tremendous amount. It was basically up $7, about almost 2.27%. That's pretty excellent. And that, of course, is the diamond. And of course, this is one that really covers the Dow Jones 30. I mean, so this is one that you want to be looking at now. Is this a good place to buy it? Well, I do like the fact that you have the. It isn't totally stacked properly, but it's getting there. It's everything is above the 200-day line. I like that. I like the fact that it's also above the 21-day exponential and the 10-day line. Only thing that concerns me a little bit is you have the 50-day line coming up here. So I probably would not be a buyer of this just based on the technical action. But it is looking pretty good. It's very close to the 21-day line. It's within 5%, 3.65%. Now, when you're buying something, you want to see how close you can come to that 21-day exponential line. That's a very good place to buy off of. But I would say, in general, probably not a good idea. Even though it is, the DIA is a good place to look. So the Dow Jones 30 probably not looking as good as we'd like. But here's one I did buy today, and I think that's the main thing, and that is that's MRO, which is Marathon Oil Company. Part of the reason I like Marathon, first of all, I do think that the oils are still underinvested, and I think that as companies look for a place to stash their cash towards the end of the year, that especially the funds that have to be fully invested, I think that they're going to look at the oils and they go, wow, that's a pretty low risk bet, even though it might not be a home run like potentially with some growth stock. It's going to provide some nice earnings, which they desperately need because most of the hedge funds and the mutual funds are down this year, so they're needing to find any place where there's a little bit of growth, and I definitely think that's true in the oils. And Marathon is a good one because they produce diesel fuel, and that is in short supply right now. What's happened is that Marathon pulled back to the top of the buy range. It's still a little bit above it's a little bit above that cup and handle for me, which is a stage 3. It's the pivot is 28.91 currently. It's 30.67, but I think it's viable definitely based on this chart. I think you're going to get a nice bounce off the 21-day line. So this one definitely I think we could look at. I bought this one, because it just looked very good to me. Checklist of 100 here, and on the technicals, we're still right at that 21-day line. So that indeed is a good place to buy it. I think you do a half or even potentially a full position here with Marathon. I think they're going to do very, very well. Again, it's not going to change the world. It's not Apple in 1982 or something like that. But it's still a really good company, and it definitely has some good stuff going for it. You'll notice that in the last earnings cycle, they were up 55% here in sales, and also up 218% in terms of profits, and that is really significant. Also, if you take a look at the PE ratio, the price to earnings ratio on this one, now normally I don't emphasize price to earnings ratio because in a growth market, price to earnings is not nearly as important, but we have sort of a strange situation with rising interest rates. In a rising interest rates environment, you definitely want to look at PE. PE is 7. That's excellent. It's better than Exxon, by the way. So this is looking very good. The cash flow, $4.45 per share. That's very, very strong. They're also looking at a strong fourth quarter, up 202%. So looking at a strong fourth quarter, not so much for 2021, 23, but definitely this next quarter, at least from what I'm seeing on the fundamental analysis here, they're looking for a pretty strong fourth quarter of the year. So interesting way. They're going to be reporting after the first of the year, of course, on February 16th. So basically, it's going to be the last quarter of the year that they're going to report. But I think that it ought to be very strong based on these numbers. So, long story short, I think Marathon might be a really, really good bet. All right, let's look at CSGP. I'm not sure what that. I should know these offhand. CSGP. Let's look at it. And there we go. All right. This is CoStar Group. Oh, okay. I know this. This is interesting. This is real estate information. I don't know. This group it's okay. It's content for market research. It is a good field, but I don't know. I'm not as sold on it. Let's take a look at the checklist here. I just want to see. It's a pretty good checklist. 89%. The only thing that's falling down are sales increases. And, I definitely, we always want to see sales. I want to kind of look also over here at some of the fundamental analysis here. We have, okay, so pretty good. 63 is the price to earnings ratio. This is why I just think that right now, under these circumstances, I think you're going to be better off with some of the oils, even though this is not bad. um, uh, Marathon is returning much, much more of the cost of the share each in earnings than this one is. So I would probably not be as excited about CoStar Group. I mean, I would be excited if there was a brand new market coming out with this one. I just really don't think that's the case here. Yes, they have some information, but a lot of stuff. A lot of stuff. There's a lot of information on real estate out there. It's a very competitive field, and I'm not so sure that it would be it's the best. So out of these two, I definitely think that you got to go with Marathon. I think that's the better of the two. And yeah, I mean, it just really is the better of the two there. All right, Miguel, thank you very much. Let's look at DJI. Let's look at that real quick. DJI. Okay. Yeah, well, it helps if I put in the right symbol, doesn't it? Let's see if I can do that. DJI. And that's going to give us, hopefully, something here. A little bit slow on the uptake today. Sorry about that. It's sometimes it works, and sometimes at this time of the day, yeah, for some reason it's just not letting me have DJI. I don't know why that's the case. Let's try it again. I think it's just a bandwidth issue. DJI. Okay, and let's look at the daily chart, maybe even the weekly chart. Let's look at something. Hopefully it'll give us the, huh. Okay, well, for some reason, I'm not getting that. Not getting that. So let's try another. Let's do something else. Sorry about that. I just not able to get it up. Boy, Doc, thank you very much. I think MPC is Marathon Refining Company. Good question. Yeah, you're right. No, you're right. There's two. I think MRO is the exploration and production. I think you're right. There's two of them. Let's take a look. I think you're absolutely right. There's two of them. I bought MRO today, but I think that you're right. I think the other one is the refiner. So let me see if I can get that up here for everybody. MRO MPC. Let's look at MPC first. Yeah, that's Marathon Petroleum. So let's look at Marathon. Oops. My screens are a little slow today, unfortunately. So let's see. There we go. That should be there. Okay, here we go. Marathon Petroleum, MPC. You are absolutely right. This one engaged in refining. Yeah, you're right. Engaged in refining, marketing, and transportation. So that is the refiner there, the MPC, and not the other one. So absolutely right. So we're absolutely right about that. So you're correct, and I was not correct on that. So I've got the marketing company and not the refiner. So the one that has the stations. What are your thoughts on airlines like JB, like JetBlue and Delta Airlines, how will they be affected by inflation? I think there's a lot of pent-up demand for aviation and for there's a lot of pent-up demand for air travel, but the problem that I'm seeing, it's just a question of, um, it's just a question of inflation and a lot of the other things. But let's look at JetBlue here. CJBLU. I want to look at it. I haven't really looked at this sector a lot. Let's see if I can get JetBlue up. There we go. And going over to the JetBlue chart. There we go. All right. So with JetBlue, yeah, it's in this long-term decline. I just don't like seeing that. I don't like buying a stock that's moving lower, and that's definitely the case here with JetBlue. Um, yeah, it's just, as you can see, it did have a dead cat bounce there, but the overall trend, at least on the weekly charts, is a downward trend. I just don't like to buy. I mean, if I thought this was if I thought this could get above the 200-day line, I'd be more interested, but I just am not. Let's compare this with Delta Airlines. What I'm gonna do here is compare it with Delta. I'm not Delta, with DIL, with all right, DIL. There we go. Okay. To kind of get a look see on that. So let's go over to the comparison. There we go. Okay, so this is JetBlue versus Delta. I mean, JetBlue versus Delta Airlines. JetBlue, of course, is underperforming Delta Airlines. If you invested $1 in Delta Airlines, you would have gotten back about $1 after a year. So that's really not that great. It is starting to trend higher, but I just don't like this area. JetBlue, if you invested $1 at the beginning of the year, you'd have 60 cents in your pocket. So neither of these, unfortunately, they just don't do it. Neither of them are really that good. So I would say avoid both of them. That's would be my opinion. Day trading opportunities for tech in the next week or so. Volatility in action. Yeah, I think so. I think so. I think there is some day trading. There is some day trading, but the problem that I'm having, and I've been going long and shorting. The problem I've just been having everywhere, every time I'm doing it, is that I'm just not getting the results. I closed I had a short on CrowdStrike today, and I started out the day really well, and I closed it, and yeah, it was down at the end of the day. Now I probably closed it early. I just didn't want to. But when the news came in on Powell, that was it. I was out. Um, but I think you're right. I think there is going to be some movement off the bottom. Now, here's where I don't want to be in the market, though. Even though I do think that some of the big cap techs are going to move higher, I just think they're all really bad. I mean, look at Microsoft. This is a premier company, and it's trading below the 200-day. The same with Apple. And even if we go over here to let's look at the QQQ, which is the Nasdaq 100, and that's going to be one of the premier tech ETFs, obviously. And if you look at the QQQ, same pattern. I mean, we're just in this downward trend. Now we're moving up here a little bit currently, but right now I'm just not as bullish on. I'm just not as bullish on tech right now, especially big cap tech. I'm really leery about big cap tech, just because it is, the big cap tech just doesn't seem to be doing that well. And I think, to try to buy something off the bottom, it's very hard to do. I'm not good at it, so I'm not good at buying the deep discounts. I just am not. I'll be totally honest about that. All right, let's take a look from Charles. Thank you very much. 337 homes for sale in the Woodlands with an average market day of 49, up from last month, 609 for rent. 850 new homes. Absolutely. You know what? And I have one right now, by the way, that is for rent. If you are interested, it's in Conroe, Texas, but Woodland School District, and it's a 4 bedroom, 2 bath house, 3 years old, for um, for 2297. In fact, I could probably show you a listing on it. That's one we have. Well, I have several other homes right now there, but they're rented. So let me just see if I can. Well, I don't know. I'll show it. But anyways, I have one there. So thank you for telling me that. But we haven't gotten. We've gotten a little bit of action on it, but we're at 2297 and essentially in that area. So thanks for bringing that up. I pretty appreciate it. I bought IMRL a few weeks ago and thinking I had bought a refinery. Well, I apologize, Obama. I should be more careful with this. I mean, I should be more careful. I just need to read the fine print. But it's a retailer, but you're doing okay. So, if it drops too much, sell it. But I think you'll do fine. I think the MRO is going to do well, just because people are going to have to buy gasoline, and they're going to buy gasoline. So that's just the chart for MRO on the weekly chart. Let's go to the daily chart over here. Let's see if yeah, there you go. Okay, so this is Marathon. This is the not the refiner. This is the this is the retailer. I misspoke so much about this. I still think the refiner is good too. Let's compare MP. Let's just compare them. Let's look at MPC versus MRO, which is the essential. Okay, so this is MP, MRO, and then MPC. I just want to see how. Yeah, well, they're pretty similar. They're pretty similar. I think other people are making the same mistake as I did, so I don't feel too awful about that. But let's compare both of the marathons here. Oops. Yeah. Oh, come on. Yeah, there we go. Okay, so these are both of the marathons, and I'm sorry for misleading you. I really didn't mean to do this. I thought I was buying the refiner too, but I was buying the retailer. These are MPC and MRO. MRO, of course, is the retailer, and MPC is the refiner. As you can see, they're pretty much lockstep. Now, it does look like you would have done just slightly better if you had MPC over MRO. So you would have done a little bit better with the refiner, but not that much better. But they both did much better. If you started with $1 here back a year ago, you would have been up quite significantly, almost doubled your money. I wish I could do that. I wish I could hold on and not get shaken out like I always do. But yeah, you would have, if you started a year ago in November and you bought these companies, you would have been very happy because you would have been up about 100%. So, oh well. It would be nice if I could do that. I mean, I always sell too early. It seems like it's just too. All right, let's see if we have something for MPC. I mean, let's look at U-Haul dip. Let's look at people that are coming in for what's considered a cheap PE. This is a good question, by the way. A cheap PE is anything under about 10. The normal PE for most of stocks out there is about is about 18. I think the average is it's about 20 or 22 around there. But anything below 10 is going to be cheaper. So let me kind of give you an idea of what I'm talking about here. And let's look at an oil refiner versus like a Microsoft. So let's first of all go to the Microsoft chart, MSFT, of course. The reason I use this one is because this, of course, is a big cap tech company, and um, you know, definitely something that you want to look at. So let's look at the let's look at the PE ratio for Microsoft over the last year or so. Hopefully this is going to come up. Oh, okay, come on, baby. Come on. There we go. All right, share the screen. And okay. So this is the so if we look at the fundamentals on Microsoft, you can see the PE ratio for Microsoft, which is one of the big, obviously everybody's heard of it. It's one of the premier industrial companies. It's also in the Dow Jones, by the way, so that's key. If we look at that one, the PE ratio on Microsoft is um, is 26, and which is very good for a technology company, by the way. So 22 to 39 has been their return. Their cash flow 11.24, so very good, and also excellent return on the equity. Now, obviously, the higher the PE ratio, the better return on the equity that they're going to have. But what this market right now is emphasizing is not just is return of actual dollars, and so the cash flow on Microsoft, which has a average price of about $250, is about $11 per year. Now let's compare that to let's compare that to a company like ExxonMobil, which is also in the Dow 30. Well, let's compare it to Chevron, which I know is I don't know if I guess Exxon still is, but let's compare it to CVX, which is kind of the other massive, huge oil company part of, and Chevron has a PE ratio of 10. You can see that. So the PE ratio, the price to earnings ratio, is essentially less than half. It's 40%. So for the price of a share of Chevron stock at 183, this is going to return to you $17.53 every 53 cents every year. So that's very powerful. 17, that's a lot considering price. So the return, even though the return on equity is less, it's only 12%. This is returning more dollars per the share price. Now, if we're going to, here's one of the ones that I own, it's BP. This has even a better price, and right, the market seems to be saying that it makes the PE ratio on BP is 4. So it's basically returning much stronger cash flow. And if you look at the return on equity, it's also extremely good at 17%. So right now, this is a kind of a show me market where people want to have the reason why many of these larger, lower PE stocks are getting favor is because people have been losing money in the market. The big cap techs are down about 40% this year. So by taking the money and putting it into a low PE stock like an oil stock, not only are they going to retain their capital, but they're likely to get pretty good return based on this. It's just when the interest rates go up, lower PE stocks typically are favored. When the interest rates are low or almost zero, like they've been for a long time, it favors tech stocks that typically are more, have higher PE ratio. It's just kind of the way the market sort of works. All right. So thoughts on the bond market? This is a great question from Bomadoc. I bought VLO. Seems to be doing okay. Yeah. Valero is another good company, by the way. That's another refiner. Not a hugely exciting company. I mean, but it's a very, very good stock. Valero, if you're not familiar with it, very, very, very good stock. So let's take a look at another one of the on the bond market. Now there is this ETF called the TBT, which is the inverse, and this is the one I think that you want to look at. Now, remember from you probably took college college economics, and they basically talk about the bond market. The bond market is much larger than the equity market. It's really, really huge. But as interest rates go up typically as interest rates go up, the value of the bonds go down. There's a lot of reasons for that, but trust me, that's true. There is an inverse ETF that works against that called the TBT, and this is the one I like to show because it is starting. It does look like it's sort of bottomed and it's moving up higher now. It's still above the 200-day moving average, so it definitely strengthening in the bond market. So this is signaling, at least for me, this is signaling that the that we look like we made the top terms interest rates to it have a interest rise, but we're not gonna it's not gonna go crazy. So this is starting to show that we may be leveling off on this, which is the hope. So that's kind of the the look there. Charles also is asking about a very interesting idea, rentals that are focused on REITs. Well, here's the thing. There are a number of companies that are in this area. One of the ones is called American Home for Rent, and I can't remember the symbol on that one. So let me see if I can get it really quick here. Let's take a look at that one. And I think this is going to give us the symbol. Symbol. What this company is that during the in 2008, yeah, and this one's up nicely. Um, this is a company called American Homes for Rent, and let's see if I can get you a Class A shares. Let's see what's the symbol. AMH. There we go. Okay, so there we go. So AMH, and let's put that up there for everybody. Oops. And there we go. Okay, so this is American Homes for Rent here. The chart on that one, and it's been falling, but we're starting to see it turn the corner here. Here's the thing I don't like about this area is that with the higher interest rates, some of the values of properties have been dropping because as you know, it becomes more expensive to borrow money. The value of some of these homes is dropping. So this has been dropping, but as of late, it's starting to move back up. I'm not really necessarily. I think that a lot of, depending on the leverage, a lot of these companies are going to have to sell some of their properties if the interest rates continue to continue to be higher. So I'm not really a fan of this. I think that you get much better cash flow off of like oil companies than a company like this. That's just my opinion right now. So, but very interesting. Charles, also, let's take a look. Also, can you give a rundown? Oh, can you get a rundown of your Discord group and what you guys do at Citizens First? Well, basically, what we do for $30 a month. Hey, thanks, man. Well, it's basically just just kind of open forum, really, and I try to listen to a number of other podcasts and see kind of how the market is trading and see if if there's anything there to do. And yeah, we just kind of go back and forth. I try to analyze each individual entry point as much as I can. I try to show you what I'm doing as much as possible. And yeah, I mean, we have a lot of fun. I mean, it's $30 a month. It helps me keep my it keeps the wheels turning here. I'm not making a fortune off of, believe me. But if you do decide to sign up, we have a lot of a lot of good traders in there, and some days it's super busy. There's a lot happening. Other days not so much. But we always are monitoring some of the other chat rooms. Sometimes unusual options actions, some other sites, and commenting on them. So you kind of get a glimpse of that. So I tend to like it. By the way, if you do decide to sign up for it, it is $30 a month, but you can cancel after a month if you want, no problem. And but if you do decide it, I would welcome you to take a look at it. It's easy to get. It's easy to link to it. Not a problem at all to link to it. All you have to do is go to www Dallas Trading Floor, and when you look at that, I think I can show you kind of where it is, so where the sign up is. So let's take a quick gander over there. So let's see if I can put that up. Um, And I also want to show you several things that we also have on there today. This is kind of what the uh, come on, baby. All right, so I think you can see this now on the screen, hopefully. There we go. So that's kind of what it looks like. And if you're looking at it, just right below this free list is if we go down a little bit here, you can see it. See if I can run it. So to get the Discord, you just go down to the second row here. Just click on that icon here, that little kind of friendly icon there, and you can get that. Also, by the way, I just wanted to point out we do have the ready list. By the way, it's ready. So just click on this one to get the ready list. This is off the site www Dallas Trading Floor. So to get that, you just go over there, and then you can get the link to see the ready list. These are curated symbols that are definitely getting ready to possibly buy. So you might want to take a look at that one too. And then of course we have the heat map. So those are kind of the three that we're featuring right now. And also if you're unsure or new to CanSum trading, highly recommend this book. You can get it by punching here. You can also get it from Amazon too. That's where it comes from. But it's How to Make Money in Stocks and Winning System Good Times About. Just punch that down there and follow that, and you'll be able to get it. So thank you for that. Thanks for mentioning that. But I highly recommend, of course, the Discord room. I'm going to be hopefully in the next few months, kind of improving the look and the feel, and possibly a little bit more education as well. I'm going to try to put in there. So trying to do a lot of stuff, but if you do it, it really helps me out. And again, I wish I was getting rich off of it. I'm not getting rich off of it, but it definitely helps me defray some of the costs. So definitely appreciate that. If you can join the Discord room, this Discord room. All right, everybody. Well, thank you very, very much for everything. Always fun to do the show, and I will be back tomorrow. It'll be Thursday, and we definitely can see, uh, you know, definitely be on Thursday. If you haven't already liked the show, please do so. It would really help. It really helps us out. And if you aren't already a member of the Action Trade Alerts, just go to www Dallas Trading Floor, and it that will be a good thing for us. And so I will be back tomorrow, of course. And so if you haven't already liked the show, please like it because it helps us out a lot. So please smash that like button. Go to www Dallas Trading Floor. Also smash the like button, and that helps us out a lot. And we will be back tomorrow at 5 o'clock. Happy trading, everybody. Hope everybody had a nice Thanksgiving, and I will be back. See you tomorrow. Thanks again, everybody, and happy trading.